Found ourselves in a little situation, right? So I wanted to talk on like why I took this trade. Okay. I'm watching two screens right now, so I'm taking the trade on my Quant Tower, and so not trading it on TradingView, but obviously I charted it on TradingView. So now watch. I took my first partial here just now. Obvious reason why. I made it to a. Now for context, I'm on the 27, I believe. Yep. So looking at this, right? The first thing you're going to notice is my dealing range shift down, or the dealing range shifted down. But I'm going to put on GB time, and I want to take off the, well, I guess I'll keep the levels on for a moment. So, long story short, all right, now watch. When you get to this area down here, 3 o'clock open, okay? Now again, watching the 1 minute, all I'm looking at is bearish price action, right? Obviously. When you see the 11 pop in, notice how this is a up run and then a down run. A lot of people will confuse this for a bullish order block. You feel what I'm saying? You have a blue candle right on support, gets taken by this up one here. Then when you return to this high, this candle, makes you think of a bullish order block so that you can buy this to go upward. But obviously price is bearish. Been bearish all week. The macro direction is bearish. We've been respecting bearish PD arrays. I'm looking for the bearish order block. Valid. And obviously you see like what happens the moment I take the trade. Literally dumps. Crazy, right? So we took it down. We had a 17s candle. I saw that. 17, obviously fair value gap, they get rebalanced. But again, we talked about consequent encroachment candles. When can I expect price to hit a major level or take liquidity or rebalance something? This is no coincidence that this is my 23 candle that hits exactly my target here. And the reason why I literally said, yo, I'm going to take a partial in here, I understand what EQ likes to do. And we have our 29 pop in, 326, right? So this is our liquidity void. It's going to go up or down. Pause the video real quick if you need to try and figure this out on the prediction level. You're looking to be a better narrator. I understand why ICT tells us to pause the video, and I understand exactly what he means when we know damn well you guys are not going to pause the video. We know damn well you're not going to do it. It's fine though. Realistically though, 29 is it going to go up or down? You guessed it. Wait for a second to figure it out. You'll know in about 2 minutes. Now, when we talk about this, right? It'll really be shown to you by 329, by the way. But the big thing is, we're talking about this fair value gap here, 17. This is very, very valid if you actually want to worry about that fair value gap, since it's not rebalanced yet. And again, I'm on a 1 minute chart, not on a higher time frame. It looks super, super big just because of the volatility on London Open. But when you see price here, right? You have this 23 here. We made it to a major level. Just a little bit past it. I'm looking for obviously the participant to mostly fill in, mostly. But I don't mind that it has a reaction from EQ that first time. Not at all. And when you look at all this, right? 17, like I said, this could be referenced again, no problem. But then again, we have sell side liquidity here too. So you're not super worried. If you get a run back to this high, no problem. Back to this rejection block, no problem. But realistically, this is where people get scared of price action, right? It just starts consolidating. No, the run is not done. No, this is not randomly bullish now that this is stopped here. No. When people are trying to figure out up or down or trying to figure out the bias, that means when you're talking to somebody or you're asking somebody, yo, is London bullish or bearish? You're looking for a session range. That's understandable. So my thing is, you need to verify things by time. Look at this, going on 3:30, right? So look, see what I mean? We got another minute on this narrative here. And what did I tell you? You're going to verify things by time. And the last thing we talked about was this liquidity void. Is this going to be up or down? We understand we have two objectives, one above us and one below us. Or actually two above us. We have this high here, liquidity resting above this. Then we have this imbalance. We also have sell side liquidity. But this is what I want you to understand. Yes, I'm expecting it down here, but do I give a fuck which one it does first? No. Not at all. Why is that? And again, I still have one open position. I still have one position left. You'd be so comfortable in your trading after a while, you'd be forgetting if you're not in one looking at it directly on TradingView. Forgot I was in a whole trade, bro. But it doesn't matter. I'm so far away, I can protect myself no problem. If I have an issue or price goes too far to where I'm comfortable, I can easily protect myself above this high. If it wants to come to EXT level, fuck it. Go ahead. I made my money already. The runner can do what it wants. Doesn't matter. This is how you get done early. And like I said, you'll see it by 329, 330, what side the actual liquidity void wants. Now, to be honest, right? Imbalance, imbalance. But this is important. We're inside of a distribution cycle. Notice where the fair value gap is in here, right? Obviously, to us right now, it's on the 27 EXT level, blasting all the way through and opens up this dealing range for us to come down into. How do you know it's not a stop run? I get that question a lot. There you go. Now, the reason why we know it's not a stop run, it actually comes slightly too far into your dealing range. Whoa. Now that was different. And like I said, we understand the objectives here. Liquidity, that's here and here. We also have a fair value gap and another fair value gap. So if it does want to go up first before darting down, I don't care. You can pyramid that if it wants to do that. But what I really want to see is a displacement back down. I want to see it be non-lethargic to the downside. You don't really want it to give you all this pushback outside of a small consolidation at one point. You want this to be energetic, non-lethargic. Now, what did I say about CE candles? These have an objective, a function. So it's going to either rebalance something or take liquidity within the next two candles. Okay? Now watch. You can keep watch on this for me while I handle this. Okay? Now, what I really want to do is I want to shift this perspective here. Dude, I keep forgetting the blunt is in my hand, and let me just hit the eliminate. So let's open this up to 81 real quick. Now look at that. Look where we came from. Now, I actually didn't use a daily range to take this trade at all. I just happened to kind of come to the 27 after I was in profit and check to see where we are. Not everything I do is based on one particular set of data. It all depends on the market environment, the time. I understand what this is going to do. Just a measure of retracement. We've been a little bullish the last 2 days. Then we crash land every time. That's why I'm trading downside. The low resistance liquidity runs are downside right now. However you look at it. Every single time this pops up, what does it do? Down. Up, down. Up, down. And again, we understand what's open. Yes, these are going to get tagged at one point. Does it have to be now? Doesn't have to be. Can I require this and still be comfortable? Sure. But again, that's where I tell you all the time, plan all the way to the end. So in your mind, if you have this open and you're worried about it and you want the money from down here, take it. You can get back in. My thing is, if you're going to be in, out, do it with a better entry. Get out here. If you really think this fair value gap is going to be offered to you again, you can either pyramid or take this one out. I'm not saying I encourage this, but you can take this one out if you want to, close fully and get back in. But if you're already this far in profit, obviously that's a stupid idea. You might as well just hold it. It's not always about the pyramid. If you only have one contract in here, okay, be satisfied. Run it the best of your ability. But that's why I stress coming in with 2 to 3 contracts. And again, if you don't feel comfortable with the size on a micro or a mini, then size down. Get 2 contracts and go trade a micro. You don't need to trade minis all the time. I understand everybody's more excited about, ridiculous amounts of money and whatnot. But if you're just comfortable just, running your trade for a certain amount of ticks and getting your entry to be a certain amount of ticks before you accept it as a valid or invalid trade, getting your stop losses down, getting to the point where you're like, yo, you know what? And here we go. Here's that fair value gap, right? But the biggest thing I'm talking about and why I care about this, where did we come from? Let's be creative. We're talking about market organization, how I'm trading London. Look at where price came from. You don't have to be a rocket scientist to figure out, wow. So we broke into the dealing range, D81, during Thursday, New York. Had a small stop run into a fair value gap here, and we dragged our ass back down. Got back up one more time. Failure to hit the EXT level, got the high, and we dumped down. Now let me make sure you see this right. So here. And like I said, why do you think I'm so not super worried about price action here? You feel what I'm saying? That's the dealing range that I'm trading, right? from up here to down here. I smacked it to this EQ. I'm not worried about a small retracement. And on top of that, if we go to look at the structure on the 5, it looks clean to you this way. And where's your obvious fair value gap? Obviously. Yes, price is going to get there. Clearly. Right? So watch, it's going to take my imbalance, and let's see the reaction from this imbalance here. And I'm getting you to be open about price. Because watch, imbalance here. You see that right here? All right, we got the imbalance. Now, this is what I want you to do when you're in this area watching price like this. Do not start jamming fucking buttons. Do not do that. Wait for a second. There could be 2 more candles going up, right? But again, we understand this is going to give me a reaction. I get that. I'm looking towards the high if this breaks. So far, so good. But again, you don't ever have to rush to get into a trade here. If it shows you that it's about to work, we understand the data. Algorithmic fair value gap and fair value gap at a crucial kill zone time of the day. Okay, no problem. Now look at that. You get a nice little candle body. We want a low to be broken, or 2 white candles in a row, or something that tells us that this is really ready to go and done with consolidation. We understand that this is a manipulation cycle session, distribution cycle, 3 to 4:30 in the morning, and look, just like that, right? And look, you're waiting for it. But look, let's see if we get let's pop into like because I'm trading on my other account here. I'm not trading the TradeAvate account. Let's do. Can we go to the panel? Thank you. Let's mess with the paper trade. Now, that's what I mean, right? This is why I told you to wait. The whole idea is we're trade managing, okay? So even if you're looking for entries here, that's fine. But what I need you to do is be more selective. So even in all these candles here, we understand that that fair value gap was there. So even if you saw all this here, you're like, yo, I want to, sell it down. Okay. You can sell it down all you want to, but when this candle rips up, you're not going to be happy about that. You're not going to be happy about holding through this. Now you're trying to figure out what the price is doing and why it's still going upward right now. Instead of you being patient and letting it give you confirmation that this is really done on this up rebalance. And again, we're viewing like a 3-minute chart. So when you're coming up here like this, look at that. We just talked about literally way before this even happened. I'm expecting the imbalance or this one. You're thinking about price like this, right? Now we're in an LV level. Notice the rejection the first time. None of this is random. Pay attention. Notice the rejection the first time. Not good enough. If you took this candle, that's fine. I like to see a nicer expansion down or the next candle to really be a nice range runner. When this candle failed to do that, there we go. You see that? Now watch. We want that to be energetic though. So that's why I said wait. So there's a nice wick here. We're not done yet. Let it be energetic to the downside. In the same way I'm coming in, I'm thinking about 2 contracts, but I really have one on my mind, right? So hold on, let's see if we can nail one or if we're going to lose something. Watch. We're looking for this fair value gap to work. So this is, we need a nice, there we go. Hold on. You could try one here. If we don't like it, we'll cut this one. If you don't like it, then we'll cut it. Okay. But you got to be quick though. So we have cells in here right now. So you see how quickly, okay, -50. Not going to go, let it go. Okay. Nice little cut. Okay. Again, that's how you attempt it. You make yourself available. Make that small loss. Beautiful. The reason why I like it like that. That's why I say you guys should not be hitting $1,000 loss, $1,200, $700 loss. You don't need to do that. We knew exactly when this candle did not do what I wanted it to do the first time. I don't have to stay for all this. Do you feel what I'm saying? That's why you don't rush every entry. Don't just get in and clip it for no reason. If this is expanding lower, wait 1 or 2 candles and try it again. And look, you get high into the imbalance. Nice rejection there. Now watch. This doesn't invalidate your idea at all. Don't come on and be like, oh shit, well, like, you know, I must be wrong. So now let me start buying shit. We talked about why it's going to go up if it does go up here. And look at this. This is why you make yourself available. We want it all the way down first. Okay. Now, we're thinking about when to pyramid. Now watch. Now, so far, when we talk about, right, I'll let you see this here. Even like right now, what you're doing is you're taking control of your trading. So the same way that we can come in, okay, maybe we had a little loss in there, right? Take something off the table. All right, bet. Now look at that. Nice expansion. Beautiful. 80 bucks up on the contract. If you don't like it, cut it. But you have to be quick on your hands. You don't like it, cut it. But look at the expansion of this candle now. Exactly. Exactly. Where are we going to get it to? We want liquidity. Come on. 118 bucks up, not bad. Now again, I normally do 3 or 4 contracts, but this is how you trade manage. Do you see how clean that was? And look, you don't like it? Get out. Told you where it's going to go. But if you're scared to hold that, you shouldn't be. But when you have one left and you're like, that's a good amount of money, trying to get back a loss anyway, you already have that in your trade plan. Where did I tell you it was going to go? Come on, bro. What's difficult about that? What's difficult about that? So the demo trade here, I'm still in this account on the Quant Tower. We're still in this thing. But do you see what I said? The imbalance is probably going to have a reaction. We called that out. Perfect for narration. And now we're here. coming down right into this breaker level. The reason why you saw me cut it here instead of right at the target, like I said, if I had a third contract, that would have been my runner. I would have had a target at the breaker level itself and at that low. The breaker level obviously causes reversals. We understand the assignment, but we also understand where liquidity is overall. Here. Do I require this to be successful? I don't need everything. I just need to understand when my shit's going to move. And do you see how perfect my second entry was? My first one could easily bomb. But how much loss did I take compared to my win? And look how long it took me to get that loss back. I can wipe the blood on that one. Do you feel what I'm saying? So there's no way that you should be taking 600, 700, $800 loss here. There's no reason to do that. I'm taking the trade when it tells me that this is ready to go. I had a logical area. We saw the reactions. I waited for a bearish candle. That's it. I'm not selling here or any of that shit. You can literally wait for it. And liquidity is wide open. That's why I aimed right there, not above me. Does that make sense? This is how you trade London. This is how I trade London, I guess. I'll say that. So now what? It's a huge white candle on a 15-minute time frame. Still in the premium. Nothing happened except one small retracement. I'm still inside of a distribution cycle. Like I said, I'm looking for price to come down here. If it doesn't, then it comes back to the high. What's scary about that? Now watch. Raise off for a second. Let's get creative. What did I say? We talked about the 23 already. I took my first partial there. I talked about this imbalance. We pulled into it and down. You saw me take that trade. Liquidity. My last video, we talked about consequent encroachment. Also, look at this 50 level. 53. So that means this was a fractal equilibrium level that we made it to. Along with this one here. This level. Actual EQ. And like I said, we understand the assignment. It's 3:52 in the morning. Watch this. We like fractal weeks. So we could use one. Why not? So let's be creative. I want to do 3:30 to 4 o'clock. That fractal week works fine. Why only a half hour this time? You might be asking. You see how it's still perfect on time. So we look at the actual profile or the expected price action throughout the fractal actual week, right? We have a 3:30. Let's lock everything. To 4 o'clock. Okay. That being said, this is not locked. Now here, accumulation, manipulation makes a W. And downside is the real distribution, right? Exactly. Thursday retracement. High of the week, low of the week. Now you step into your Friday. So it's going to have a measured retracement, right? There is an imbalance here, but this one doesn't fucking matter. We're not bullish. Not worried about that. So that means this is another distribution cycle, isn't it? This path was done, or this panel. So now Friday. Narrate with me. You're a reliable narrator now. TGIF setup. What's it likely to do? Up or down? Pause the video, make a guess, then play it out. Now watch. I'm not going to say anything. I'm just going to direct you as to what's happening. By the time we're done this panel, you'll see it. All right? The reason why I type TGIF is for a reason. Keep watching. And like I said, this fair value gap is here. Do I care about it? No. Thursday was the low of the week. So when you're on Friday, are you trading towards the low of the week if it's the day before? No. But watch when we get to the end of the panel. Watch. And there's liquidity above the Wednesday. Now, what do you think? Is it going to come up and tag the high? Yes or no? Or is the 59 candle going to leave it alone? What do you think? Takes liquidity. Okay. Now what? Because what did we just say about price? Monday, accumulation. Tuesday, manipulation. Wednesday and Thursday are your distribution cycles. Wednesday being the weekly expansion, and Thursday being a Wednesday and Thursday being a market maker buy model. TGIF setup can easily have a bullish day. But do I care about that fair value gap? No. And I'll show you why. When price runs liquidity like this in a counter trend, it's not actually bullish. It creates a vibe operating the buy stops. But you notice inside the panel now, we have the objective from the Wednesday to the Friday completed. What happens when the objective is completed? It gives a small retracement. Where is it going to retrace to? Now watch. It's going to fake act like it's bullish. Watch. Really think to yourself, there's only but so much time left in here. Why would Friday leave this imbalance open? That one got filled. We took liquidity. Now, there's a high of a Goldbach level here. That's why I left this on for you. And what did I say? It's going to act like it's fake bullish. Well, it's going up. How's it fake bullish? Watch. Ready? And like I said, there's only but so much time for price to make these certain movements. I love things like this. And it goes to show you that like price action is not the hardest thing after a while to navigate. You don't feel as though price action needs to finesse you all the time. And look, watch. 4 o'clock. We get some up candles. But now, we're talking about fractal weeks, right? Imbalance left open. All this is going to move, but you need to understand when to go and when not to go. What to expect. So when you pop into a 4 o'clock, right? We're still in the kill zone. Distribution is no different. When you get a measure of retracement like this is why the accumulation profile for a week is very difficult. People get uncomfortable with price action because they start jamming orders. They think now, okay, it's high enough again so that I can sell it. Yeah, it is. But the problem is you need to wait. I've said it before. You have to be patient. It needs to complete another objective before it does what you want it to do. See what I mean? Every single time it gives you a vibe. Yo, hold on. Maybe I'm wrong that it's not sell side. Maybe it is bullish. I should start buying shit. Now, the thing is, if you're actually trading this fractal week and you use the logic that we talked about and you bought the fractal Thursday, attacking this liquidity because this is now the low of the week and the Monday was taken out on the low. I would have been like, bro, that's logical. That's super logical. That's fine. But the problem is, it's all about your perspective and understanding your version of the algo versus what the algo is really doing. Why do you think I tell you? This is not up to me. I don't just sit here and tell you shit because I wanted to do whatever the fuck. These things have order. And once you get good at understanding this order, you're not finessed by this anymore. Yeah, you have this little bullish run, and it makes you think it's not gonna jump back here, all energetic how it just did. Look at it. Now watch. There's this imbalance, and then watch this here. Now hold on. I'm on a 2-minute. So if it wasn't going to reference this one, watch. Hold on. Where is it? It's a little imbalance in here. Do you see this candle? How it came down to this low here? And we also talked about the fair value gap up here. We talked about that. But that doesn't change the objective. Fair value. So that's what I was saying, where I'm looking on the 1 and the 2-minute for these objectives. And like I said, it's going to be fake bullish. Why do you think when it runs up like this, gives you a doji candle? It gives you a perfect double-sided wick. Now, this is the funny part. How do I know that prices still want to come back down? Not just because this is open. Watch closely. Do you see this candle here? Breaks this top wick. This candle. Do you notice how it breaks both sides of the previous? Let's expand. But the problem is, London's been bearish the entire time. Now, it's going to make all these little objectives here on the way up. It's going to make liquidity. It's going to create flout, buyers and sellers at the same time. I say it all the time. Now, even on a more simple note, like I said, this candle creating this structure here, this goes to show you exactly what I'm talking about. There's evidence of it. I don't just say shit for no reason. Now, like I said, the reason why it's fake bullish, it's going to create the impression that this is going to stop, or, stop the down run, and this is just going to realistically just keep going forever. It's not going to do that. It needs to come and mitigate exactly what it just did. This candle taking both sides of the liquidity is a clear sign of reversal happening soon. And people don't realize this. How often do candles break both sides of a candle? How often does this happen? It's really not often. But people don't understand that. This is a clear sign to somebody else in the marketplace from a smart money perspective that, hey, this is actually not as bullish as we thought. If this had the ability to leave open a fair value gap, a candle broke a high and a low. Why do you keep getting met with these? Why? You have to understand this. And again, London is going to do manipulative things. That's why this goes too far, too fast, and you're met with a massive retracement. Even though this took 1, 2, 3, 4 candles to go up, half this range can be taken out by one candle. That's why I say you're going to get used to these types of narratives. Every single time you watch price like this. Now watch. I'm not doing anything with the numbers. I didn't do anything fancy. I'm just looking at the structure. We talked about that. We also talked about how when we left this open, we jumped down here with this candle. We got this close to it and didn't touch it. Okay. Yeah, fool somebody else if you want to, not me. And the funny part is, when you see this 59, right? Someone else might think, okay, well, this is just fair value gap. What's 59? And when we think about the breakers and the mitigation blocks, it's always like a zigzaggy, annoying, retracement type of price action. So when you leave something open like this, and again, other people love these types of gaps. This is probably somebody's DOL for or entry point for their silver bullet, is what they're thinking about this for. But the problem is, and again, we're looking at ES, so it's a lot slower than NQ. This type of structure goes quickly. ES has been slow this year, but I don't mind it because it's great to study. And like I said, look at the vibe. Leaves this high, range expand down, break a low. This candle, this needs to push up above this to then take this out. If this doesn't do it in a energetic way, we're going to have another series of up then down. But if this is going to have like a moment of, watch this, 24 seconds, and again, 2 minute. ES is slow, so that's why we're looking at the 2 minute instead of the 1. But we need this to push aggressively. If it's going to take the liquidity offer to us. Okay. So when we're looking at, one sec. Well, I mean, I do all the time, and I thought I did. I lost the lighter. I guess I gotta find the lighter again. Dude, how do I always lose the lighter like this? And watch, you can watch price action with me. This is like ridiculous how quickly that got lost. Hold on. One sec. Somebody remind me where I put the damn lighter. Dude. It has super escaped my clutches. Huh. Dude, this is the worst. Oh, wait, I found it. See, I knew I found it. I got it. I got it. So, back to what we were talking about. Like I said, you guys can watch the price for me while I'm stoned and forgetting my lighter. And so, really watch this. What do we talk about? This fair value gap. Okay. We talked about this still being open. We talked about these candles here specifically when we came up from the fair value gap. We had a doji, it broke a high here, so it was bullish, yes. But the reason why I said it's fake bullish is because we still have an objective that's still open. And I can see that clearly. And a lot of people get worried, hey, I think it's going to go away from me. Maybe I should trade now. Not understanding that the type of candles they're looking at have an impact. When we're looking at price like this, right? And again, I'm completely understanding of the objective. So when you see how price runs up like this one creates a high, your body is down here. When this candle takes the high and the low of the previous singular candle, this is showing you signs of reversal. You see what I mean? Now, like I said, if this has another round of up then down, it's going to be super, super aggressive towards this high. It needs to be aggressive. And it's going to give you the idea, like, watch. If this is a DOL now, we'll know. If not, it's going to race down to this imbalance. Now watch. The DOL is, again, it's no different. Both objectives are fine. Which one is first, I do not care. But what I do like to see is the evidence that this is really, really tough to break. If we get up there in 10 seconds, I want to see that. But this is the thing. Price is rarely going to leave these imbalances open like this. So it doesn't attack it in the first few minutes, right? And look, it's going to attack the liquidity. See what I mean? You got to be comfortable with that, changing a part of your narration, just like that. Like I said, that does not take my eyes off this imbalance down here. Not one bit. And again, we're not looking at dealing ranges. We're not calculating super numbers. We're just simply looking at the price action. But watch. This is high here. What's left open now? Think about it. Be creative. This is how you narrate. And you're not going to get worried when new candles pop in and you think you're going to change your bias only because you have a few candles to the upside. This is not going to change your bias. Liquidity is being made. The imbalance is still open. You have to feel me on that. When price makes liquidity, yeah, it's going to take it. Is both of these an objective for right now? Sure. Does it bother you that this gets hit first before that? Only if you're looking to sell this too early. Like I said, it's about patience. So when you see, okay, cool, liquidity's taken now, maybe I can try it here. Now watch. Look at the 2 minute. Like I said, we did not take that level, but we got down here last time. Rejected the high completely with two beautiful, nice downside candles. What do you think it's going to do, likely coming into another period of distribution? What do you think? There's about 10 minutes or 13 minutes left in this cycle here. Like, for example, 90-minute cycles. So, see what I mean? So far, now completely solid. And even if, like I said, we keep these in mind, We didn't rule it out at all. We planned for it. This is how you stay in control and stay calm. Oh my God, bro, I know the fair value gap is open, but you keep on selling that shit. You feel what I'm saying? Don't keep selling up candles. Let it go. Try it here. It don't work. Try it again. And look, what did I say? What's offered to you immediately? Sell side liquidity. How easily did it just jam down back there? You tell me, Bob. That was quite easily, wasn't it? Look, where are you going now? It's not about what I want. It's about the algo's perspective. I told you this imbalance was open for a reason. It's not going to get left open. When you get a run above these stops here, and you're like, whoa, oh my God, is it bullish? Should I just buy it? Fuck it. You know what? Fuck it. I'm bullish now. No, you wait. You literally wait. If it wants this high here and goes back down, cool. You want this up here, cool. But you're going to realize, what did I say? I already had this narrated before we even made this high, bro. I told you that a reversal would happen soon. You have 2 minutes. It made more sense, right? Watch. This candle took out this candle's low and the high. That's why we mark these both yellow lines. So when this goes up and makes this perfect wick like this, that's why I said I wanted to watch for reactions here. Okay, if you want to be energetic above these candles, we know what it's going to do when it runs here. It's going to run to this high. We talked about the fair value gap over here. And like I said, this has an actual 17. That's going to react. But what got left open in the process? This imbalance. I told you price was not bullish. This is what I'm talking about. This is what I'm talking about. And like I said, that's an actual 17. So are you surprised that price is not actually on the buy side? You don't have to come in and change your bias every 5 seconds to get scared. You understand the objective and you run the trade. And like I said, what's still wide open down here? It's still a distribution cycle. You're not going to be confused by stuff like this. When have I been wrong on narrative on something like this yet? All it was a slight variable. And that's totally fine. And from here, we can narrate something different because this is all we were focused on. The reaction between this fair value gap, the one that was underneath us, there was another bullish one here that got left open, candles breaking both sides. That does not happen often. Really think about that. Now, if this bullish candle breaks this side of the marketplace, what are we aimed at? Upward. It has trouble breaking these candles here. We're likely going to spool lower. Again, I haven't looked at a dealing range since I turned it off. You don't need that all the time. But what you do need to look at the candles. You need to study the candles. And if anybody was quick enough to see this, you realized what candle actually came into my imbalance. And we talked about this. What time can I expect these things to come back to me? CE candles, 23. Rebalance is something. If you were bullish and you tried that 17, it's not going to fucking work. You needed to look downside. This was still wide open. If you understand the objective, yes, you can trade toward that. I've been in sales this entire time. I have not touched the button yet. I'm not going to let all this scare me out of my position. Do you feel what I'm saying? You need to get to a point where, again, holding is just straight natural. Not because you like have to make more money, but your understanding of the objective as a whole. Price doesn't just reverse for no reason. It doesn't retrace for no reason. You need to figure out what these reasons are. We're still in that fair value gap. I'm drinking lemonade right now, and it's like half and half iced tea. Oh my God, it's so good. Now, I'll be honest. Hopefully the OBS got this one. Um, it looks like it might have had an issue, but we'll check it in a moment. But I appreciate you guys for watching this London session live review, and I'll see you guys in my next video.